Hey everyone, thank you so much for watching again this week. Today I have Gil Pocker. He is the Chief Financial Officer, the co-founder at Scout Financial. Today we're going to be talking about write-offs and basically what businesses should look out for in write-offs, some common write-offs that you can utilize in your business. I think that's a pretty good way to summarize it.
It's a great place to start.
Okay, cool. But before we start, go ahead and hit the like button, hit the subscribe button. Let's get started. So Gil, off the top of your head, what are a couple common write-offs that businesses can utilize, and then how would they utilize them? Like for someone who's a first-time business owner or someone who doesn't really know anything about write-offs, they're a solo entrepreneur, and they have their own little business. What are some things that they could utilize, some write-offs that they should definitely be taking advantage of?
Well, that's definitely a great question. And those write-offs, those expenses are accumulated in a variety of ways depending on the type of business that they have, whether it's product-based or service-based. One of the most common write-offs you hear all the time is a vehicle. Whether you have actual expenses and you take depreciation and insurance, repairs, maintenance, registration, all of that into consideration, or you just take the standard mileage, which for 2021 is going to be adjusted. Previously, it was 57.5 cents a mile. That's going to be your first most common expense.
Okay.
Next, you have obviously supplies. You have office supplies, and you have small tools for the job. You have equipment. Depending on the type of equipment, be it computers, cell phones, iPads, or machinery, they're all going to be depreciated at a different rate.
Yeah.
For example, computers depreciated over the course of 5 years. Going from there, you also have utilities or rent. If you're renting a space, be it a portion, be it a small shop floor. Let's say you have you rent a little warehouse for products. That's deductible. Even if you're renting out a storage facility, it's deductible. But if you're renting an office, obviously.
Am I able to write off a portion of that if I have like a specific room in my house that's designated for my office, or how would that work out?
Absolutely. So what that is, it's going to be a business use home.
Okay, cool.
Business use of home. Now that's one of the things that are going to vary, obviously, whether or not you own or rent.
Yeah.
But that's not really going to affect too much the expense you're going to be able to have, because it's still going to take a portion. You theoretically take the size of the room you have you take the square footage of the size of the room as opposed to the square footage of the overall area of the home.
Okay.
And that's how you take that percentage and apply that to any and all expenses associated with the upkeep.
Yeah, that makes sense. Perfect. And then, like you mentioned, vehicles, one of the biggest ones, right? So if I'm just driving, like if I do a cross-country road trip, is that also included? It would have to be related to business, right?
Yeah. I mean, if the cross-country road trip was, let's say you're hauling material.
Yeah.
You own a truck, and that in the back of the truck, in the bed of the truck, you're hauling material you're using for your company. Absolutely.
Yeah. Or if you're driving to some type of like seminar or something that will benefit your business, would that also be available? That's awesome.
So any mileage, put on your vehicle that has in nature associated with your business, it's tax deductible. Okay,
and then how would you recommend that they like record these? I guess keeping the write-off. So let's say we're on vehicles, we might as well just keep going with that. How would you recommend that they record the mileage? How would you have them keep receipts? Would you have them do some type of logbook? How would specifically like?
Well, in the event of an audit, IRS is going to ask for a logbook.
Okay.
So
okay. Yeah.
In theory, a logbook is the best. Now, it's not always the most practical. There are plenty of tools today that you can use in place of a logbook.
Apps, I'm sure there's tons of them. Yeah.
Apps that will actually help record mileage, where you can literally click start.
Okay. Cool. That's good.
And then you'll have your sum of your monthly and total mileage.
And then so what about with gas prices? Does that affect the write-off as well, or was there a certain rate that's specific for writing off?
No, if you're taking gas prices and then you're going for the approach of doing like actual expenses.
Yeah.
Then you're going to be you'll take the total cost of gas associated with the business use of the vehicle. You're going to take the percentage of the business use for maintenance, so brakes, tires, overall maintenance, percentage of use for registration, and you're also going to be able to depreciate the vehicle. So if the vehicle costs you $40,000, you'll be able to depreciate that $8,000 a year.
Okay, wow, nice. That's awesome. So, and then that doesn't matter if it's used or if it's new or if it's...
Yeah, the depreciation is based on the purchase price.
Okay, okay.
And it doesn't
Sweet.
matter if it's leased, purchased, financed,
Wow.
however you do it.
That's awesome. And are there any certain, like, when your business gets to a certain level, that write-offs either benefit you more, they benefit you less? Like, if I go from me owning my own business and I'm the only employee to having a business with 10 employees, is there a difference with what you can write off, or is it kind of all generalized in percentage of what your expenses are?
That's a unique question.
Mm-hmm.
So in terms of the value of said write-off, that's going to be directly correlated with your tax bracket.
Okay.
So now let's say you spend $100, that you have an expense of $100, but your tax bracket is 33%.
Okay.
You're gonna get that. You're gonna get the $33 for
Gotcha.
that $100. Now let's say your tax bracket's 15%. You're gonna get $15.
Okay.
Of that.
So the more revenue you make, the
more effective.
Okay.
That expense is.
Gotcha.
But again, the whole purpose of claiming the expenses is to offset your tax liability.
Gotcha. So that makes sense. So it definitely would benefit, I guess, a smaller business, or the lower the tax bracket more.
In terms of helping mitigate tax liability.
Yeah.
Absolutely.
Okay. Perfect.
It's a lot easier to accumulate expenses at that stage that are tax deductible and that are more used for that given period, whether it's a calendar or fiscal year.
Yeah. So right now, if there's a business owner watching this video and they want to do write-offs, but they don't know where to start, how would you recommend them start tracking their write-offs?
Call Scout.
Call Scout. That's a good one for sure. Yeah, I mean, you mentioned a logbook. You mentioned just keeping track of things. Obviously, you could hire an external accountant, an external bookkeeper, anything of that nature. But like, so I guess it would just be keeping. It's just, you got to start somewhere, right? You got to start. Got to start at something.
You want to create some sort of logbook. Have some sort of breakdown. In a perfect world, you'll have a true set of books.
Yeah.
Which, we're not in a perfect world.
Yeah.
But doing whatever you can to help best keep your records clean.
Okay.
Is the best place to start. So that way, when you're coming towards that year-end review with your accountant or tax preparer, bookkeeper,
Yeah.
Whomever is going to help you clean that up, it's going to be clean and painless as
Yeah.
opposed to providing a shoebox, because that's not a fun experience.
For anyone, yeah. I'm sure you've experienced quite a bit of those.
Unfortunately, quite a few times.
For sure.
More so than I would like to admit or remember.
Yeah. All right. Well, I think that's a pretty good breakdown of write-offs. Basically, anyone who doesn't have an understanding of write-offs, if you watch this video, you're gonna have a general understanding. Obviously, you can talk to an accountant, talk to one of us in detail about it, and get specific guidance. But I think if someone watching this video doesn't really know what a write-off is, I think this video obviously provided some really good value, to the watcher. I think that's pretty good for today. I appreciate you guys watching. Thank you so much for taking the time, listening to this advice. Don't forget to hit the like button, hit the subscribe button. We'll see you guys next week.